Hi, and welcome to section 6-3. Our topic today is extending financial statement information on a worksheet. Here is the worksheet example that we used from yesterday. However, now we can see more columns on the right. We now have an income statement column and we have a balance sheet column. What we're going to do is take all of the information from cash through drawing that we can see on the left. We're going to take those balances that we see in the trial balance column. We're literally going to lift them up and shift them down over to the balance sheet columns. The balance sheet columns eventually in chapter 7, we're going to create a balance sheet using this information. But for now, we just need to know that everything, all the balances from cash through drawing, are going to be rewritten from the trial balance column and transferred or extended down to the balance sheet column that we can see. The only two balances that are not going to be exactly the same are the ones that we have adjusted earlier. Supplies and prepaid insurance. Since we had adjusted those two accounts, those are not going to be exactly the same. So supplies, am I looking at the trial balance column, which represents the beginning of that fiscal period? We started supplies off at $1,025. But yesterday we've learned that we had consumed $715 of supplies. So at the end, the balance sheet, which represents the end of the fiscal period, that balance is now $310. So you take your trial balance amount, subtract the adjustment, and you are left with the balance sheet amount. Same thing for prepaid insurance. The fiscal period started at $1,200 in the trial balance column. We consumed $100, which is in the adjustments column. And so our ending balance in the balance sheet column is $1,100. So $1,200 minus $100 leaves us with $1,100. The remaining balances are exactly as they appear in the trial balance from accounts payable through drawing. Those are exactly the same. So you literally just pick those up and shift them down to the balance sheet column and rewrite them exactly in the same place as they appear in the trial balance column. So that is what we do with all balances from cash through drawing, or in other words, lines 1 through 10. In this part of the worksheet, we're going to take all of the balances from income summary through utilities expense. We're going to lift those amounts off the trial balance and shift those down into the income statement column. The income statement column in chapter 7, we're going to create an income statement, but for now, we just need to know that we need to take all of the beginning of the fiscal period amounts in the trial balance column and shift those down into the income statement columns. Everything is exactly rewritten from the everything from the trial balance column is rewritten into the income statement column, except for when there was an adjustment. So let's look at insurance expense on line 14. Notice that trial balance had nothing in it. There was no debit or credit for insurance expense, but we did have an adjustment in the adjustments column as a debit. That was $100. So what happens is that adjustment is going to be what is placed in the income statement. We have a $100 adjustment as a debit, so we have a $100 income statement debit as well. Same thing for supplies expense. It's a debit of $715, so the income statement debit is also $715. Everything else, the sales, advertising expense, miscellaneous, rent, and the utilities expense, the numbers as they appear in the trial balance column are going to be lifted up and extended down into the income statement column exactly as they appear. So, the rest of this I'm going to explain as we complete the work together, because I believe that's going to make more sense to see it as we do it. So, for this, you really don't need the textbook essentially to complete this. What we need to do is just have what we have in the worksheet. All the information we need is in the worksheet. So let's start extending information. Let's look at everything from cash through drawing first. Okay? Cash through drawing first. So, the trial balance column represents the beginning of the fiscal period. So this is February 1st, which is the beginning of this fiscal period. So cash, petty cash, accounts receivable, we're just going to take those totals and we're going to extend them into the balance sheet column. Exactly in the same place and the same numbers. Now, supplies and prepaid insurance, we can see that those had adjustments made to them. So we're not going to take the same numbers from the trial balance column and move them down to the balance sheet. Instead, we're going to have to make a little mathematical adjustment. So supplies started the fiscal period at 456, like it appears in the trial balance column. So it starts at 456. We're going to subtract the adjustment of 131 because that represents how much we used. So what we're left with is 325. That goes into the debit column because the trial balance is also a debit. Not the same amount, but if it's a debit as a trial balance, the balance sheet amount is also going to be a debit. Then we have prepaid insurance. Since that was adjusted, we have to calculate that as well. So our trial balance tells us that prepaid insurance started at $750. We had a $250 consumed amount in the adjustment column, so we're going to subtract that. So $750 minus $250 leaves us with $500 as a debit in the balance sheet column. Now the remaining balances, accounts payable, capital, drawing, those were not adjusted, so those will literally appear in the balance sheet exactly as they appear in the trial balance column. The next part of the worksheet is everything from sales through expenses. But these amounts are not going to be written in the balance sheet column, but instead are going to be written in the income statement column, unless there was an adjustment. So let's start with sales and advertising expense. Those amounts are literally going to be picked up and extended down into the income statement exactly as they appear in the same columns that they were. But when we get to insurance expense, you'll see that there was nothing in the trial balance, completely blank. But we did have an adjustment at $250. So what we're going to do is take that adjustment, which was a debit of $250, extend that down into the debit column of the income statement column. So that is how we complete an income statement for when there was an adjustment. You just pick the adjustment up and extend that to the income statement. Miscellaneous expense, nothing was changed, so we're going to leave that exactly as it appears. However, we get to supplies expense. There was nothing in the trial balance, but we did have an adjustment of $131 as a debit, so we're going to write that debit amount of $131 in the income statement column. Then we get to the utilities expense account title. That started at $1,100. There was no adjustments made to that, so that can literally be rewritten exactly as it appeared. Now what we're going to do is we're going to total these columns, the income statement and the balance sheet. What you need to keep in mind, though, is they are not going to have debits and credits that match. These are going to be separate totals that don't match any other total. So you can see that those totals for income statement and balance sheet, the debits and credits do not match, and that's okay. We don't want them to match yet. Now the next step on line 17 is to decide if there was a net income or a net loss. To figure that out, you have to look at your line 16 for the totals. You can see on line 16 in the income statement column that we had a total credit total of $4,320. That represents the total amount of sales that were made during that month, during that fiscal period. But then in the income statement debit column, we have a total of $2,790. That represents all of those expenses that are listed above that. Those are all the expenses that were paid during that fiscal period. So which number is bigger? The sales, $4,320, are bigger than the total expenses, which is $2,790. When you have more sales than expenses, you have what's a net income. That's what you want to have. So what we need to do next is calculate the difference between the income statement credit total and the income statement debit total. We have to subtract the two. When you subtract the two, we get a total of $1,530. But because we had a net income, in other words, we had a sales total that was larger than our expenses total, that $1,530 is going to be placed in the two outside columns. $1,530 is placed in the income statement debit column and the balance sheet credit column. Those are the two outside columns. Had there been a net loss, in other words, we had more expenses than sales, the difference then would not be placed in the two outside columns, but instead would have been placed in the two inside columns, if that were to happen. So the last step that we need to complete is we need to total our the remaining last two rows. So we're going to add rows 16 and 17 together for the income statement debit and income statement credit columns. When we do that, we have debits and credits that match. Same thing with the balance sheet column. Add rows 16 and 17 together, and you can see that those two debits and credits match as well. And that is how we can double check our work. We have to make sure that they do match when we add those last two remaining rows together. And that is how you extend information on a worksheet.